Hello, hello, and welcome to February 19th. Alphas have a new leader with American Express at 89%. There it is, American Express, 89%. We had our higher low, lower low, higher low. So our stop now is at 126, right there off that low with a little bit of a buffer. You can see the notes have been captured up, and most important, the order ticket has been confirmed at 126 or less. We're out of this trade. Um, that said, we are now going on to Bank of America. Bank of America is running at 65%. And let's take a look. And 65%, there it is. Now, it's still short of its third ratio. Our third ratio is 3490, and we got to 3473, but the close was, here on the data box, the close was at 34.54. So it still needs to get another 40 cents, and then we can go start looking for a higher low, lower low, higher low, or a lower low pullback. The lower low pullback is what we'll be looking for an exit for Bank of America once it can complete its third ratio. Going on now to RCL. Now RCL is a bit of a surprise. I mean, seriously, where are these ships doing? How are they producing any kind of money? But apparently they're staying alive, and they have not got to their third ratio right there. So we're now looking at a nice, good, steady creep up. That's what you want. Why? Because the pullback then is not going to be as severe. When you have like a rocket straight up and then come back down again, you can get some severe lower lows. All right, RCO at 47%. That takes us to Berkshire Hathaway, Berkshire, Berkshire, Berkshire. Okay, here we are. Now, it did receive its third ratio right there, and our current stop is right here. This is the lower low. We're now waiting for a new lower low to form up here and then be able to move the stop up to here. Now, I had a conversation with Darren Kimoto, OTA Headmaster, about the lower lows and the last bar low at ROI 100. And the conclusion was it's either one is good. They're both good. Each has its reasons. The last bar ROI 100, last bar low, if you're at 100% ROI, last bar low, which what we saw earlier happened this past week with XLE, and no, XLE is not here. XLE is here. Okay. Now you saw in an earlier video we did reach 100 ROI. Now I'm going to explain this also very shortly about XLE because we're setting up a trade that got canceled, and it's good. When do we cancel orders? This is a very good lesson on that. So, um, the thing was we closed at 100 ROI here, and we went the last bar low here, and we got stopped out here for an 80% return. How do we know that? Right over here. There it is. XLE exited on 218, which was Thursday, yesterday, and we picked up an ROI of 80%. We took 345, and that reduced the O now to 263. That's our O. Now, well, back to the question on the ROI. Which of the two X's do we take? And it becomes a chicken egg situation. ROI. Let's detail ROI last bar low. Well, what the advantages of ROI 100 take profit. One, locking in profit. Doesn't matter what it is, a profit's a profit. Bigger the profits, better it is. Two, cut off time decay. And three, builds buying power. Now, so those are the advantages of the ROI 100 take profit. The disadvantages could be said that disadvantage, not letting profits run. And that becomes the chicken and egg situation. On last bar on last bar low, or not last bar low, but on the lower low, the pullback, the lower low pullback, we have our situation where now we have this, which is what's happening here, what's happened on XLE. Now it did go up, so we could have put the low stop here, and then if the stop comes down here, it actually gets out lower than our last bar low here. Or this goes up a little higher and comes back down into our same stop. We lost two things. We lost time, and we lost an opportunity of getting out here. And it becomes a real dilemma. So the answer comes into what is where you're feeling is, and I hate to say the word feeling, but it really comes down to what kind of a trader are you going to be? Are you going to be an aggressive trader and take that extra opportunity because you could make good money on that high run, or you're going to be a conservative trader and take the money and go back? Look here, this was $1,100. In past videos, you can go see the trade from a few days ago. This was 1,100. Now it's only 263. So I'm sorry, it was 609. This was 609 a few days ago. So we're now. What happened here? We did set up a trade here. This did come up on the scanner yesterday. If you watched yesterday's video toward the end, or no, it was in part two. It was in part two of yesterday's video. What about tomorrow? We were setting up this trade, and the situation happened was we had a reverse on the stochastic. The stochastic went up a little bit. RSI went up a little bit. Order is canceled. That's when you cancel your orders. When your entry conditions change, pull your order. Take back your money. Defend your buying power. So the order was changed because the SOT reversed direction. We were looking for a put yesterday. There it is, one put. But the SOT reversed, order is canceled. So that's today's lesson on understanding when to cancel an order. All right, let's go on now to, that was the, BitShare was the last of the positive territories report. Another order that was standing for today was ATVI. And ATVI also got canceled. We were anticipating a down, which we got. I can zoom in a little closer. And we had put a limit order. We had calculated that we don't want to pay more than $451 for an option. Well, the option came down to my entry price, but it didn't come down to my buying price. And the result was this order was canceled. Now, I am going to be running the scanner. Again, as you can see, our buying power is back up above 10% of the 5,323. And do note that we are only now $210 short of benchmark. But we're going to be running the scanner for 1282. And if this requalifies, we have a chance because ATVI right there, beautiful $95 strike price, which is what I was looking for yesterday. But now the AB is now within the parameters. And with that said, that will conclude today's report for Losers Become Winners for February 19th. Alphas lead out American Express with 89%. I thank you and take care. Bye-bye.